Hey, what's up, my friends? So welcome back to this month's Forex and Stocks Forecast. This is a video, right, which I publish each month sharing with you some of the best trading opportunities that I'm seeing in the FX and the stock market. So I'll break down to you, right, step by step, my thought process to why I'm looking to trade certain markets, how I'm looking to enter the trade, manage my trade exits, and much more. So if you always want to dive deep into the price action analysis of the markets, how I look at markets, right, then this type of video is pretty much your thing. So let's get started. So the first pair that I want to bring your attention to is Euro Dollar. So if you look at this market, I just zoom out a little bit, right? You can see that this market generally, it's in a long-term uptrend. It recently broke above this area of resistance, as you've seen, around the 1192 area, and then it broke out higher. So at this point, I am bullish on Euro Dollar, but the question is, where do you get on board the trade? So here's the thing, just because you're bullish on a pair, just because a market is in an uptrend, doesn't mean you buy immediately, because when you want to set proper stop loss, right, it might not, have proper levels that you can lean against. So let me explain. So for example, if you look at Euro Dollar right now and you're bullish on this and you buy at this price point, where do you think is a logical place to set your stop loss? Well, some of you might be thinking, oh, I'll just put it below the previous day low, somewhere here, maybe somewhere here, or even somewhere here. And if you think about this, does this make sense? In my opinion, no, because the market could make a pullback, and then those levels where you put your stop loss, right, pretty much will get you stopped out. So if you want to set a proper stop loss on Euro Dollar on this daily time frame, then you want to have a frame of reference, a reference where you can use it to set your stop loss, right, and where the market would have difficulty breaking, or rather moving against you. So for example, a useful frame of reference would be this previous resistance that could become support. You know that this is an area where potential buying pressure could come in. So if your stop loss would be to be somewhere about here, right, then you can see that there's this barrier that the market has to go through, right, before it reaches your stop loss. But now again, of course, if you were to buy at this price point at here and you set your stop loss over here, you can see that your stop loss is going to be pretty wide, about 200 plus 300 pips. So might not be comfortable for most of you. So what can you do to improve your risk to reward on this trade? So what you can do is something that I have said over and over again. Let the market come to you. Let it come to you. Don't chase the market, right? Let the market come to your terms, on your grounds. All right, that is, where you will shine. So for example, this over here, right, is where you could possibly look for buying opportunities. Let the market come to you into this previous resistance that could become support. Okay, so this time frame or the 8-hour time frame, all right, I leave it to you. So for example, let's say the market comes down lower, it dips and pulls back, and it forms a bullish reversal candlestick pattern like a hammer, like this. Okay, at this point, you can tell yourself that, okay, market is in an uptrend. It's at this area of value where previous resistance could become support, and now you have this bullish hammer telling you that the buyers are stepping in to push the price higher. So there's a good chance this market could reverse higher. So you go long on the next candle open. That's one way about it. And this time, when your stop loss, right, when you set your stop loss, you can just set it distance below this low, somewhere about here. And you see that the size of your stop loss is now dramatically reduced, right? Your stop loss could possibly now be in the realm of, I would say, 100 plus pips compared to the earlier size of your stop loss, which is around from here all the way down to this area over here. So you can see that by letting the market come to you, you reduce the size of your stop loss and you improve your overall risk to reward on the trade. Okay, so this is Euro Dollar. This is one pair that I would say is worth keeping a lookout for this coming week or the next few weeks. Moving on, next one. Pound against New Zealand. So again, if you look at the big picture, Pound New Zealand is showing signs of weakness. If I just zoom out a little bit, you can see that recently this market has broke below this area of support and this upward trend line over here. Right, so two multiple confluence area of support plus the upward trend line, got broken down. So there's always a possibility where this could be a false breakout where the market could end up reversing up higher and then reverse from there. That could be a possibility, but until the market proves me wrong, I'm just going to trade what I see, not what I think. I think this could happen, but what I'm seeing right now is that the market, right, has not shown signs of a reversal that it wants to head higher. Okay, so I'm going to trade what I see, not what I think. So this is the area of support that I've drawn previously. Okay, so this is also have the upward trendline confluence area. So to look for selling opportunities, I would say the lower time frame, like the 8-hour time frame, would be a good reference in this case because you can better analyze the price action of the markets. And where I'll look for selling opportunities is at this level of this area over here, around the 192 area. So the market could pull back, retest into this area of resistance, reverse down lower strongly, right? Could be a bearish engulfing pattern or even a shooting star. Looking to sell on the next candle open, stop loss 1 ATR above this highs. First possible target just before this swing low over here, so you can capture this one swing over here from here down to here. Okay, so this is my game plan for pound New Zealand. Let's have a look at one more pair. Okay, dollar against the South African rand. So I made a mistake previously where I called this the African rand, and people get offended, and it's my bad because I just wasn't attentive enough. This is dollar against the South African rand. And one thing to point out is that the setups that I've just shared with you right so far is all trending markets. And you might be wondering, hey Rayner, why is this all trending markets that you're sharing? Because hey, the trend is your friend. I find that this type of market conditions, right, really put the odds in your favor because you can, increase your winning rate because you're trading with the trend. So I would say this, if you ask me, are the best trading opportunities out there. Simply markets which are already trending, making a pullback, right, looking to buy at the area of value and then to capture the next swing up higher. Vice versa for downtrend. Okay, so same thing for this dollar against this South African rand market. If you just look at this big picture analysis, I zoom out a little bit, you can see this market had this series of lower highs which came into support. Then it broke down recently over here. So at this point, right, the market has, heading down lower consistently. And what I'm seeing right now is that this downtrend is still pretty strong. If you just pull out the 20 MA, you can see that the price has been consistently below it, right, since it broke down below support, right, consistently below the 20 MA, 20 MA, 20 MA. So what I'm seeing right now is a potential trend continuation trade towards the downside. So why do I see that? It's because from here, there's another tinier descending triangle over here, right? Series of lower high coming into this area of support. So it might not be obvious here, but if you go down to a lower time frame, it's going to be much clearer. For example, the 8-hour or 4-hour time frame. So if you look at the 8-hour time frame, you see this lower high into support. So my take is that weakness is likely to continue lower, and I'm looking to short this market. So the way to go about doing this is that if you go back to the daily time frame, pull out the 20 MA, right, and I just zoom out a little bit, you can see that this over here, this $15.44 area might be an area of resistance, right, around the 20 MA, and also previously it was a respected level over here as resistance. So there's a good chance this level, right, could be a resistance area where buyers would have difficulty breaking out higher. So the game plan for this is, again, trading with the trend, looking to sell the breakdown of this swing low. If the market can break below this swing low, looking to short this market, and this is the swing high that I'm going to reference against to set my stop loss, right? So 1 ATR about above it, somewhere about here. So in this case, you can see that, again, my stop loss is at a level which I'm comfortable with, because for the market to reach this level of stop loss for this area, it has to break a few things. It has to, number one, break this 20 MA over here. Number two, it has to break this red line over here, which you saw earlier, could possibly act as resistance. So I'm making the market work hard, right, to take my money. If you want to take my money, I make sure you work hard for it. And that should be the mindset you adopt, right? You want to set your level, rather, you want to set your stop loss, right, at a level where the market needs to crawl, struggle, and reach and take your money. That is where your stop loss should be. And this is the same for the dollar against this South African rand setup, which I've just shared with you. Okay, and oh, by the way, for those of you who are unaware, right, coming this 19th and 20th December, I'm hosting Traders Fest. It's a 2-day free online trading event where I've invited 4 expert traders, right, to share with you their trading strategies and techniques, right, that work in today's market, right, and to share it with you and hopefully improve your trading results. So this event is completely free. I'll put the link below these details. Put the link below this video for full details. You can register for it. It's free, right, and just be part of it. Okay. So if you have more details, I'll keep it towards the end of this video. But for now, I want to move on and talk about the stock markets. Okay, so let's move on and first and foremost get a bird's eye view, right, of what's going on in the stock market right now. So I'm just going to look at the S&P 500. This is possibly, right, one of the most followed stock market index in the world. So if you just zoom out again the charts, S&P 500, you can see that this is still a market, right, where the buyers are, they are in control. It's in a long-term uptrend. There's no reason to short this market, all right, or think that the market is going to collapse. We're in a recession. It's a bear market. No, none of that, right? Again, trade what you see, not what you think, right, or what other people think. Just trade what you see. The price is what pays. You buy something at $10 and sell it at $15, you make a profit of $5. Regardless of whether people think you're an idiot or whether that's a bad decision, you're still going to make a profit because the price is what pays. Okay, so I want you to look at this chart and ask yourself, touch your heart. Is this market in an uptrend, downtrend, or range? And if you have, normal eyesight, I'm pretty sure you'll say that this market is in an uptrend. And since the market is in an uptrend, you want to continue, right, to look to buy stocks, right, when there's an opportunity that presents itself. But first, right, let me just share with you a little bit more of an in-depth analysis to this stock market. So yes, I agree that this stock market index is in an uptrend, but if you look at the price action over the last few days or last few weeks, right, volatility in the market, right, is shrinking, right, and getting smaller, and it's pretty much at this area of this swing high over here. So there are two ways, right, this could play out, and it's going to sound commonsensical, but I'm just going to say it anyway, right? First and foremost, number one is that the market could head up higher, right, and number two, it could possibly retrace down lower into this area of support, and the third thing is just pretty much just range and go nowhere. Okay, so with this in mind, right, so there's always the possibility that, this is now at the highs, or rather the overbought area, market could, swing down lower. So you want to be prepared for this. It doesn't mean that from here, market swing down, market is in a downtrend. No, it's just making a pullback, a correction, and the overall uptrend is still intact. But you want to be aware right now that price, right, are temporarily on the high side because it's at, at this swing high over here. So if you want to trade stocks, right, if you want to buy stocks, your stop loss, right, you don't want to have it to be too tight, because if it's too tight and the market makes a correction down into this next area of support, this I would say it's a medium-term area of support, your tight stop loss on the stocks that you're trading will likely get triggered. So if you trade stocks, right, make sure the buffer, or rather the stop loss that you have on the stocks that you trade, are large enough, right, to possibly withstand this pullback if it occurs. Okay, so just something for you to think about. So let me just share with you a couple of setups that I'm looking in the stock markets right now. So first one, CMG, Chipotle Mexican Grill. My wife tells me they serve fantastic food over here, but unfortunately due to COVID-19, I have no chance to try it yet. So anyway, Chipotle, just zoom out the charts again. This is what I like to do. Look at this market, right? You can see that overall it's still in a uptrend. We are looking for buying opportunities, right? Market uptrend, look for buying opportunities. So I'm just going to zoom in inside and let you see the price action of this market. So what I'm seeing over here is this market possibly form this double bottom over here, even though it's an uptrend, coming into this area of resistance. And what I'm seeing, I'm starting to see, lower highs into this resistance, right? Lower high, and who knows, possibly another pullback, lower high, and then could possibly break out higher over here at this breakout of this resistance. So my plan, right, is for this market to make one final pullback, a weak pullback, just to form another, sorry, not lower high, higher low, right? I said it wrongly. It formed a series of higher low into resistance. So I'm looking for it to make another higher low before it breaks out of this area of resistance. And if it does happen, right, I'll be looking to buy the breakout when the price breaks and close above resistance. As for stop loss, right, you can remember earlier I said that on the S&P 500, if the market makes a deep pullback, you could possibly, right, get stopped out on that pullback if your stop loss is too tight. So I'm going to reference this level over here, this area of support, to set my stop loss. So there are a few ways to do it, right? The simple way is just to use a 30% trailing stop loss. So based on my own backtesting, I find that a 30% trailing stop loss when trading the large cap stocks, right, is enough buffer to kind of withstand the short-term pullbacks in the market. So if you're going to go with a 30% trailing stop losses, which is quite straightforward, so let's say market breaks out higher at the $1,000, $1,400 price point, you go with a 30% trailing stop loss, right? You just take 1,400 multiplied by 0.3 and you get X. I don't know what's X right now because I don't have my calculator with me, but that would be my trailing stop loss. That would be my stop loss, okay? So if the market goes up to, let's say, $2,000, okay, I'll just adopt my trailing stop loss, just multiply by 0.3. Sorry, this should be 0.7, my bad. Multiply by 0.7, right? And it will give me a value of, in this case, will be $1,400. So my trailing stop loss will be at $1,400. So this is what we mean by having a 30% trailing stop loss. So this is quite a wide trailing stop loss because for this particular trade management is that you're trying to capture the longer term trend. So if you're into short term trading, swing trading, then this approach won't work for you. But I'm just sharing with you the thought process to why I want to use a wider trailing stop loss, because as you've seen earlier on the S&P 500, we're on the high side. So if it makes a pullback, right, and I go with this trailing stop loss approach, I should still be in this trade, right, instead of getting stopped out. I hope that makes sense. Okay, and another example over here, this is IDEXX Laboratories. So you can see that over here, just zoom out your charts, this market is still in an uptrend. And again, in an uptrend, you want to look for buying opportunities. And again, once again, you can look to buy the breakout of this possibly this highs over here. Okay, so the market could continue inching up higher, breakout, break and close above resistance, look to buy. You can go with a 30% trailing stop loss as what I've mentioned earlier. If not, you can reference this swing low over here or even this swing low over here and have your stop loss 1 ATR below it. This way, right, even let's say the S&P 500, which I shared previously here. Okay, over here. Okay, we saw that if the market makes a pullback, say it pulls back towards it could be pullback towards this area or possibly over here, right? I have no idea whether it's going to pull back to here or this one here. But whichever the case is, right, if you have a wider stop loss, right, there's a good chance that you could, you know, still remain in the trade instead of getting stopped out on the pullback. And of course, if the S&P just consolidates or it breaks out higher, then you will, you know, reap hopefully, right, reap some gains towards the upside. Okay, so that's my thought process to, you know, those two couple of setups which I've just shared with you. And before you go, right, just want to, you know, walk you through Traders Fairs. So this is the page over here to register. It's free. Just go down to tradingwithrayner.com/tradersfairs. Okay, you can see that these are the 4 speakers that will be speaking on the 19th and 20th December. If you're on a different time zone whatsoever, I have, you know, the clocks in London, New York, Singapore, Australia, or you can just Google, you know, time zone converter and, you know, find out what it is in your time zone. So we have, you know, people who are day trader, FX trader, people who talk trading psychology, stock trader, and a lot more. So I'm pretty sure there will be something for you on Traders Fest event. Okay, so with that said, right, just go down to the website, tradingwithrayner.com/tradersfest, register. It's free, right? And I'll see you at the event itself. So with that said, I wish you good luck and good trading. I will talk to you soon.